Dear plus 2 accountancy students, good morning. Let us continue the book back questions. Now in this session, the short answer questions are continued. Short answer questions are continued. 4th, 5th and 6th questions are continued. State the procedure for calculating the profit or loss through statement of affairs. State the procedure for calculating the profit or loss through statement of affairs. The difference between closing capital and the opening capital is taken as a profit or loss of the business. But we shall adjust drawings and additional capital. Take the closing capital as the base. Take the closing capital as the base. Drawings should be added. Additional capital introduced must be deducted. Now we get adjusted closing capital. From the adjusted closing capital, deduct the opening capital to know the profit or loss. That is, closing capital, add drawings, less additional capital, we get adjusted closing capital, less opening capital. Now we get profit or loss. Differentiate between statement of affairs and balance sheet. Basis of distinction. Statement of affairs, balance sheet. Objective. The statement of affairs is generally prepared to find out the capital of the business. Balance sheet is prepared to find out the financial position of the business. Accounting system. Statement of affairs is prepared when double entry system is not followed. Balance sheet is prepared when accounts are maintained under double entry system. Basis of preparation. It is not fully based on ledger balances. It is fully based on ledger balances. Reliability. It is not reliable. It is reliable. Missing items. It is difficult to trace the missing items in the incomplete records. Here, missing items can be traced easily in double entry system. Next question. How is the amount of credit sales ascertained from incomplete records? Credit sales can be ascertained by preparing the total debtors account. Total debtors account. Debit, credit. Particulars rupees. To balance PD, opening balance. To bank account, check dishonored. To bills receivable dishonored. In the credit side, by cash account, by bank account. Cash received, check received. In the credit side, by discount allowed, by sales returns, by bad debts account. Finally, bills receivable account, bills receivable received, and by balance sheet closing balance. The difference between debit side and credit side is sales. That is, to sales, credit sales. Total both sides. Okay. Credit sales can be ascertained by preparing total debtors account. Okay, students. Thank you.